Hi everyone, I'm Ryan, and welcome to another episode of Black Folks Network. A lot of you guys in the members of the network have talked about or have asked questions regarding taxes and how do you manage the taxes of your cryptos and now the new security tokens that are starting. So for that we have here two other members of the network as well. I'm here with Sean and Perry. So hi Sean, hi Perry, welcome.
Hi. Hi. Thanks for having us.
Thank you. And they're from well, if you maybe if you can introduce yourself and then tell a bit more of how you're doing, what you're doing also with the NODE40 as well, and then we take it from there.
Yeah, sure. So I guess I'll take the brief background. So Sean and I started NODE40 back in March of 2015. So we're coming up on 4 years here. We started as an infrastructure hosting company, and it was within that first year that we realized we had to get into figuring out tax liability for tokens. So our customers were paying us in cryptocurrency. So just like any token at this point, at least in the US, the IRS considers them property. And then we had to quickly come up with the ability to figure out our tax liability at the end of 2015. It was really built for in-house purposes, so that we could figure out what we owed. But as soon as we had wrapped up sort of the minimum viable product, we realized anybody interacting with tokens was going to need our product. So through 2016 up to the present, we've really been working hard on the accounting side and the cost basis side for tokens.
Right. So yeah, my background actually starts in digital currency back in 2015. Maybe it'd be late 2014. I was chatting with Perry. He's really the one who introduced me to all this. And like he said, we started as an infrastructure company. We knew that there was a lot of market opportunity within the blockchain space. So we weren't necessarily traders. We just came up with a product to help people who wanted to get into the space without having to be very technical. We are technical. That's our background. We were software engineers to begin with. So once we did that, and as we're accepting digital currency, that's when it really became obvious to me that this is an amazing space. But if it's going to catch on, it's going to be regulated. People are going to have to pay their taxes. So we put a lot of effort into finding an answer to those complex tax questions. It turns out that there still are very few answers. And as we get further into the blockchain space, there are more issues that are arising that weren't addressed with the early on understandings. And probably most people listening to this podcast have heard of, or at least understand, the IRS 2014 memorandum. They say it's property, and these are all the treatments of it. That was probably fine for 2014 when digital currencies were being treated like currencies. Now, I understand that they're not currencies. Only governments can really issue currencies. But as we get into more use cases of blockchain, we enter, let's say, digital securities. So STOs. They're tokens that represent security. So now the tax implication has to change. And I think we're getting into that. At NODE40, because we really track cost basis. We're not accountants. We're not here to tell you we don't file taxes for you. What we do is we track cost basis, and regardless of how the regulatory bodies will eventually say this is how they're taxed, the cost basis component won't necessarily change. I don't think it will. So we found ourselves in a niche here that we can track cost basis, give that information over to a CPA and say, okay, apply whatever regulatory standards there are for this stuff.
Very interesting. So you guys have basically found the problem of that is very time consuming, basically, to go through the whole crypto investment and one has and check all the gains, the losses, and
that's right.
And with NODE40, you're just providing basically a platform to manage that, right? If I understand well.
That's right. And as more and more customers come to us, whether they're individuals, tax preparers and CPAs, or exchanges, we see firsthand the kind of problems they're faced with. So our product evolves to support the needs of our customers. Which is beautiful. We have that agility right now. And I can see the lack in regulation is having an impact. So I'm anxious to hear what comes out of the industry in terms of regulation. Mm-hmm. I'd like to be a part of that conversation too. So we have been able to take part in some of them.
Interesting.
Yeah, it seems like that lack of regulation really opened the door for us because, there are traditional cost basis companies that apply to traditional investing. But to this point, none of them are really tracking cost basis as you look at the blockchain. So none of them are taking a technological approach to tracking cost basis of tokens. So that's something that we're unique in providing.
And maybe we can discuss also a bit about your target group. Is for what I see also when I checked on your website that is I don't know if it's a strategy more to be more focused in the US at the moment and later on more on other countries, or is now also available for individuals outside of the US?
Right. Okay. So we approach this, I say, from a kind of a selfish perspective. So we use our own product to calculate our own companies and personal tax liabilities when it comes to digital currency. We are in the US, so our product logically is very US based. But like I said, as our customers come to us, they're coming to us from all over the different jurisdictions, all over the world. So we're getting into more jurisdictions. We're not ready to release support for that yet because there's a lot of nuances that extend far beyond the nuances of the lack of regulation in the US. But our intent is to expand into new jurisdictions that play a big role in specifically STOs and ICOs, although I think we're going to probably see less ICOs moving forward.
Now that you mentioned STOs, maybe we can talk a bit about that. On how do you see also that space or that development in the US?
Right. Okay. So with ICOs, it's really interesting. I'm sorry. STOs they represent like economic rights. So where digital currency like Bitcoin represents a specific asset with value, but STOs, you have to look at the tax implications from a perspective of what is it representing, and it's representing economic rights, and that happens to be tied to a digital token. So when you're trading an STO token, you're not necessarily. So are you spending inventory? Like is the token considered inventory? According to the IRS right now, I think the answer is yes. But I don't, I mean, this goes to the lack of regulation. I think what's going to end up happening is the IRS is going to say, okay, they're going to have to define what an STO is. And if your token qualifies of whatever they're going to come up with, then it's taxed differently. It's taxed like a traditional security. But right now, I mean, right so what economic rights does an STO represent? We have, is it debt? Is it equity? Is it ownership in an asset? That's not really defined well in the blockchain space with the current regulation out there. All we have from the IRS, and that's the only taxing authority we care about right now, is their property. Well, that complicates things because we're trying to, there's a new use case of blockchain, STO, and I think it's an amazing use case. I read these articles, STOs are going to take over the world. I don't know. I mean, more articles I read, I think that, yes, everything's going to be tokenized. I can see a benefit to it. Typical use case being, intellectual property, REITs, right? Tokenize a building. That's a very popular one, a very, very obvious one. Venture capital, being able to raise money, and basically any private security when you're trying to raise capital. So there's a huge benefit, and you can see organizations kind of chomping at the bit. They want in, but you have this compliance problem to get over. And right now, until the IRS makes it perfectly clear how these STOs can possibly be taxed differently, it's a challenge. It's funny because STOs are trying to solve a couple of problems. One of them being marketplace liquidity, right?
Yeah.
Well, this so early on that it's actually having the reverse effect. There's no liquidity because there's not enough people, there's not enough players. I think that will change in time. And I think it will change once regulation becomes very clear of how these STOs and other tokens should be classified. I think there's going to be different classifications along the way, not just property, and you're on the hook to figure out what that means. What's really nice about what we do at Node40 is we do track cost bases. We don't necessarily care what you do with the values once we tell you what they are. So even with an STO, when you buy into an STO or you trade an STO, you are moving something of value. And it's based on tax regulation. Tax law says, now that you have that value, how does that apply to your particular tax situation? And that's where Node40 kind of steps out of the way. We don't take that role. We're not CPAs, we're not accountants, but what we do is we track cost bases. So if we can audit the blockchain and produce a historical picture of what you did, assign cost basis to your original acquisition, and through its trades, all the way to disposition, we give that information to you, you hand it off to your CPA, and your CPA says, oh, well, according in the US, STOs are actually securities now. And so we're going to treat these as securities. And in this particular bundle of equity, as they say, represents debt. And debt is treated this way in the property tax law. So I want to say I don't care about this. I mean, I do care about this, but regardless of whether it's debt, equity, or asset ownership, or like a partnership, so to speak, you still have a transfer of value, and we track that value, and that's really where our role is in all of this. Does that make sense?
Yeah, it makes a lot of sense because at the end of the day, you have one single place where you can see the value of your different different assets that you own, digital assets that you own. And then, so if I understand well, you guys provided the tech basically, and then the platform. And then with that information that I've gathered in the platform, then I can contact my accountant, basically.
Yeah, that's right. And I think as STOs really pick up speed and become more blessed by the SEC or IRS, whatever regulatory three-letter name you want to set out there, I think you're going to see more platforms emerge that handle kind of everything: the onboarding, the KYC, the AML. They also handle the exchanging of the digital currency. They handle the custody of the digital currency. They handle the tax implications. So in the US, that would be the issuance of, say, a 1099-B form. I see Node40's role as partnering with those platforms to kind of handle the auditing, the transparency layer, helping platforms that want to get into the space or grow around the space, helping them understand what the movement looked like, the cost basis, because that's a need. Whether we provide that or not, it's still a need of these platforms. Aside from that, I think where we can grow our own business in this space is providing third-party auditing. So we can, if a platform, if you're trading on a platform as an accredited investor, then the platform's going to be issuing you IRS forms. Well, we as a third party in that environment, we can verify. We can provide a I don't want to say stamp of approval, but say, yes, I can see, because this is all based on the blockchain. This is not on paper in some back office anywhere. It's not necessarily centralized. We can, as a third party, look at the blockchain, look at what took place, and say, yes, you're in compliance, so to speak. There's just so many avenues for us to grow our own business and play right within the realm of STOs. I think it's really exciting. I think I'm happy for STOs. I see a bright future there. And because of that, it's another use case that our company can expand along with the industry. It's very exciting.
Yeah, it's interesting also that I was thinking while you were talking that a lot of the insurance platforms at the moment have, in terms of compliance, they always look at the KYC and AML, but they don't think about all the rest, actually, like what you just mentioned.
Right. Yeah. So the issuing platforms, they're, and then there's the custody layer, and
Yeah,
so
exactly.
so you know, they're partnering with existing companies. It's in this space. The technology is pretty intense. So instead of building everything from the ground up, really reinventing the wheel, so to speak, the platform exists as a corporate entity that can provide you with custody, but maybe they're not providing custody. They partnered with someone like BitGo that can provide that custody for you. And then they would partner, say, with a company like NODE40, maybe NODE40, that can track those assets along the way to make sure that they're staying in compliance. They're partnering with exchanges. So T0 is a good example of an exchange that you can trade your securities on. Their goal is to grow that way. And then other exchanges. I don't know. I mean, it's still so early to know really how this technology is going to be used, but there's one thing's for sure, there's a lot of options out there.
Yeah, and yeah, the other thing that is also you're totally right is that what we do know that at the moment is that it's because of its super early days, is that there's no platform that has every single thing that they need. So partnerships are crucial.
Right.
For exchanges and for issuing platforms. So I think in that sense, it's very interesting what NODE40 can provide in terms of partnering with those suppliers, service suppliers.
Yeah, I think that's definitely going to come. We're going to see more of that right now, as Sean mentioned. It's like businesses don't quite know what to do, so they're just trying to put their best foot forward. And what we're seeing is exchanges are sending, you know, reporting forms to individuals, and the individuals are coming to us to verify if what the exchange is reporting is correct. So we're just going to see more of that until we see more partnerships where people can really, I hate to use the word trust, but trust what the exchange is telling them.
Yeah, exactly. Let me just go through some of the questions that we got from the community that I asked before we. So I just asked in the community that we were talking. I told everybody that we will be talking about taxes and crypto and security tokens, and some of the questions were regarding your target group, if it was only about the US or abroad as well. We covered that. Can investors in security tokens also use NODE40? Yes, right?
Essentially, yes. Now, I want to couch that with the stipulation that we track hundreds of different digital currency valuations at any given moment. If the STO that you happen to be trading is not one that we're tracking, then the short answer is no, you can't use us for that. But we're always expanding. So what we typically do is when a customer comes to us and they have a token or a digital currency that isn't necessarily in our valuation service, what we have, our cost basis service, we add it. I mean, we find a way to identify what the costs of those the values of those tokens, whatever they are missing, and we go out and get them. So we're constantly growing our valuation service and our cost basis platform to include those tokens. So just because we don't have something doesn't mean we won't, I would say moments later, but very soon after we identify something's missing. Mm-hmm. And kind of I want to go back just very briefly about other jurisdictions. We do track not only the US dollar, but also 10 other popular fiat currencies. So we have the data, we just haven't released it onto our platform yet. Once we decide to do that, it will be a very low lift in order to get that done. So we built the system with the intent to grow into those jurisdictions.
Yeah, so what that means is people from other jurisdictions could use us now, and then when we release support for their jurisdiction, they're just going to tell us what that is, and we would do the conversion for them.
Got it. Perfect. let's go through some of the other questions that we had here. This is probably a question more for an accountant, but I'll say it anyways. Someone asked, is an investment in a security token offering exempted from taxes?
Is an investment exempt from taxes?
Yeah.
Well, okay. Well, I have to be clear that I'm not an accountant, but my take on this is that simply buying in doesn't have a tax obligation. So it's when you dispose of the asset is when you have a tax obligation. It's not just disposing back to the fiat currency that you issued it in, but also when you're switching between. So a lot of these STOs you can't necessarily buy in directly. You are let's say you buy Bitcoin. You convert the Bitcoin to the STO or buy Ethereum. Ethereum is probably the most popular right now. That's the platform that's already out there. One of the struggles is acceptance. Well, guess what? Your infrastructure is already in place if you're using Ethereum. So in order to get Ethereum, you buy Ethereum, convert to STO. On that conversion, that's a taxable event. So prior to 2018, there was some ambiguity in the tax law saying, does the like kind rules, like Section 1031 of the IRS rules, does that apply to digital currency? Well, it didn't explicitly say no. So a lot of people are taking the stance of, well, of course it applied, so I don't have to pay taxes. That's one tax position. I don't happen to agree with it because I think it's hard to defend, but that doesn't matter whether I'm right or wrong. I do know that in 2018 and beyond, the like kind rule no longer applies. So if you are buying a currency to then use it to buy your STO, that is a convertible and taxable event. But once you have it in, if you're you buy your STO and hold it, like a lot of these STOs have time rules. So if you buy an STO, you can't trade it for 3 months, a year, whatever the time restrictions are. Yeah, no, if you're not disposing of it, you're not moving it around, there's likely to be no tax event. But again, I'm not an accountant, I can't say that for sure.
Yeah, exactly. But let's go. So what other questions do we have here? Oh yeah, a business that is considering in running a security token offering, and they were asking if Node40 is something that they could use to embed in their own platform. So then there is also they can provide that to the people that would become their own investors.
Yeah, certainly worth considering. Like we talked about earlier, partnerships are an important part of this space. So one of the benefits of wanting to go the STO route instead of a public offering is it's cheaper, it's faster. Well, it's only cheaper and faster if you have those partnerships in place. So a lot of these platforms, they write once, run many. So you can onboard more companies faster. So partnering with a company like Node40, if you're considering to issue an STO, that's something that you definitely want to explore that early on in the process, because we provide a core component of what an STO ecosystem would need to have anyway. And whether you're using us or not, you have to have that in place. And we're very open to exploring those conversations.
Yeah, we saw the same thing happen with ICOs where when there was the big ICO craze, they were all reaching out to us to see if they could do an integration. And while we were able to help some, a lot of them just sort of disappeared. I don't see that happening with STOs. I think it's a much more stable approach.
Yeah, and I would encourage any organization considering an STO to talk to us before, or at least during the process, because the ICOs that have came to us like, okay, I issued my ICO 10 months ago. I have tens of millions of dollars. How do I pay my taxes? Well, so it's easier to start early those conversations than, because a lot of the decisions you make with how you're going to be moving your assets around, if you don't necessarily understand the tax implications of those, you may be setting yourself up for a big tax bill at the end of the year, and knowing kind of the behavior that would be most beneficial to you is important. And whether we provide that information, I mean, like I said, we're not lawyers or accountants. We happen to know a lot about this stuff because this is the nature of the business, but it doesn't mean that we can't stamp approval. Like we're not authorities. So but we do play that important role.
Yeah, it's really important that if companies want to have staying power in this industry, they need to take a compliance first approach. So we're advisors for a company called NodeSwap, and one of the things they've nailed down was, how do we deal with compliance first? And once we deal with the compliance, you build the platform around that.
Yeah, that's very interesting. And going back to what you were saying, Sean, about this ICOs raising millions and then coming with a problem to you, and then, yeah, that says a lot about that market, about the ICO market, and then that probably, as you mentioned, Perry, that will probably change with the ICO market, because it's actually an actual business behind, and that has been incorporated in a specific jurisdiction.
Right.
But I think with that, I have all the questions that we had from the community. One thing that I wanted to mention as well for the members of the community, also, as you guys just said, where we always try to do the same when in the BlackFox network community. Once we try to partner with a lot of different actors in the security token scene. So if he is a company running or planning to run a security token offering in the Netherlands, for example, or in Germany, or in Malta, or in the US, then what we try to do is to connect them with a local lawyer firm or custody services. So we just filter, and we pass through the right people in every or companies in every country. I don't know if there's anything else you guys would like to say, something that we haven't mentioned, or.
No, I mean, you could talk about this stuff for hours, really.
Yeah, we could go on. Yeah.
Right, it just goes on and on. I think trying to retrofit STOs into existing blockchains has benefits, like Ethereum, because it's out there. But I think we're going to be seeing more blockchains that are focused on STOs that can help with the compliance side, because these existing blockchains are trying, like smart contracts, are trying to retrofit compliance into an existing infrastructure that was not necessarily intended to do that. So I think in 2019 we're going to see more blockchains come out that are specifically for STOs. So we'll see.
Yeah, interesting. Well, thank you very much, guys, for your time. And if somebody that any member of our community that would like to get in touch with you, where can they find you?
Oh, yeah, just at the website. Go to node40.com, and we've got contact information. So email, phone numbers. We're pretty widely accessible. Perfect.
Okay. Thank you very much, guys, and to everybody in the BlackFox network. If you have also any other questions, you can also approach them directly on our website and blackfox.network. And we'll leave it until here, and then probably in a few months from now we can have a catch up to see, like, once probably 2 months is going to be like 2 years from now. Just everything moves so fast. Is always going to feel like 2 years. But thank you very much, guys, and then yeah, hopefully later in this year we can have a follow-up conversation.
That'd be great. Yeah, no, thank you for having us. I love talking about this stuff, so anytime.
Great. Thanks, great having you. Cheers.
Yeah, cheers.
Bye, guys.
Cheers. Bye.